So have you ever really thought about what it takes to manage money for a living? I mean, really manage it. Not just, pick a few stocks that are hot on the internet. In this crazy, complex financial world we live in, how do you actually prove you've got the chops, the ethics, the skills, the deep knowledge to be a true master of the craft? Well, it turns out there's a global gold standard for that. It's the Chartered Financial Analyst Program, or CFA for short.
All right, let's get into it. Here's how we're going to break this down. We're essentially going to build a master analyst right here, from the ground up, following the 5 key pillars of the CFA curriculum. We'll start with the absolute foundation, which is ethics. Then we'll give our analysts the right tools, teach them how to be a financial detective, help them understand the entire investment world, and then finally, put it all together.
Before we even dream of crunching numbers or analyzing a stock, we have to start with the single most important piece of this whole puzzle, and that's the ethical foundation. Seriously, this isn't just some boring rule book you memorize. Think of it more like a moral compass that has to guide every single decision you make as a professional.
Just take a look at this. This is standard 4VA, all about loyalty. And let me tell you, this is not a friendly suggestion. It is a hard and fast rule. It basically says your skills belong to your employer, and through them to your clients. You can't cause them harm. This is the absolute bedrock of trust in finance. Without this, the whole system just falls apart.
And that gets at something really deep here. The CFA program isn't just about what you know. It's about how you behave when the pressure is on, and maybe when nobody's even watching. It's as much a test of your character as it is a test of your intellect. It's about making good choices, period. So these principles, they're the core. And you notice a theme here, right? It's all pointing outward. It's about client interests first, personal interests second. It's about protecting the entire profession, the entire market. It's a really profound shift in focus from what's in it for me to what's my duty to others. Okay, so our ethical compass is set and calibrated. Now let's start filling the toolbox. To analyze anything in finance, you've got to be fluent in its 2 main languages: quantitative methods, the math, and economics, which is the context for everything.
Now, I know what you're thinking. You see a formula like this and your eyes might just glaze over. But hang on. This thing, the Gordon Growth Model, it's actually asking a really simple but incredibly powerful question. What is a stream of income that I'm going to get in the future worth to me right now, today? Answering that is everything. It's the absolute heart of valuing a stock.
And the toolkit isn't just a bunch of math equations. It also digs deep into core economic ideas, like perfect competition. Why does this matter? Well, because it tells you what kind of world a company lives in. Is it a price maker or a price taker? Can it set its own prices, or is it totally at the mercy of the market? That changes your entire analysis.
So you've got your compass, you've got your tools, but where do you point them? The next big skill is learning to be a financial detective. You're going to focus all those tools on one single company to figure out what really makes it tick: its health, its strategy, its real value.
And this isn't just guesswork. There's a system to it. First, you gather the raw data, the financial statements. Then, and this is key, you standardize them so you can actually compare apples to apples. After that, you calculate ratios to check the company's vital signs. And finally, maybe most importantly, you have to figure out the quality of the company's earnings. Are they real and sustainable, or is it just some accounting smoke and mirrors? And this is where that process becomes so powerful. Look at this table. In absolute dollars, who knows which company is bigger? But once we convert everything to percentages, a story starts to emerge. See Company B's inventory? It's a much bigger piece of their asset pie compared to the others. Now, is that a red flag or a brilliant strategy? We don't know yet, but this is the kind of critical question the analysis forces you to ask.
Okay, so being an expert on one company, that's great, but you can't have tunnel vision. A master analyst needs to understand that company's place in the whole universe of investments. That means knowing all the different asset classes out there. We can start with the 2 big ones, stocks and bonds. They really represent a fundamental choice. With a stock, you're an owner. You get what's left over after all the bulls are paid, so your potential return is unlimited, but so is your risk. With a bond, you're more like the lender. You get paid first, but your return is usually capped.
It's a classic risk-reward trade-off.
But the investment universe is way bigger than just stocks and bonds. You've got alternatives, like hedge funds. These guys are playing a totally different game. They're using complex tools to try and make money whether the market goes up, down, or sideways. Understanding these is absolutely critical for building a modern, diversified portfolio.
And here we are. This is where it all comes together. The ethics, the tools, the detective work on companies, the map of the investment universe. It all culminates right here, in the final act, actually building a portfolio. This is the architect's final design, tailored for a real person with real goals.
This chart right here, this is the closest thing to a free lunch in finance. It's called diversification. Look at the risk, the standard deviation of a single stock. It's pretty high, right? But just by combining it with a bunch of other stocks, poof, the risk drops dramatically. And if you optimize the mix, it falls even more. It feels like magic, but it's just the power of not putting all your eggs in one basket.
But here's the million-dollar question. Because the best portfolio on a spreadsheet isn't always the right one for an actual human being. This is where the numbers meet psychology. This is where a good analyst has to become a great advisor.
A master analyst has to understand these two separate ideas. First, there's your willingness to take risk. That's all in your head. It's your personality, how well you sleep at night. Then there's your ability to take risk. That's financial. It's about your wealth, your time horizon. A great portfolio has to fit both your financial reality and your emotional comfort zone.
So, after this whole journey, the ethics, the math, the analysis, what's the big takeaway? The CFA Charter gives you this immense, powerful toolkit to make smart, evidence-based decisions. But maybe the most important lesson of all is humility. It teaches you that the future is always uncertain, that no model is perfect, and that in the end, every single investment is a carefully calculated, well-informed bet. And learning to make those bets wisely, that is the true craft of a master analyst.